Hello, this is Joe Pryor, the virtual real estate team in Oklahoma City, and I want to talk again, as I do every month, about interest rates. And you keep thinking that maybe they won't go up more, but they have gone up. And this is without the Fed meeting in November or December and possibly raising rates again, which is what we expect. But the bond market, has been selling off. And so what happens when that happens, what they do, is that they have to give you a better yield in order to buy treasuries. That's what keeps paying the bills, because governments run deficits, and the deficits have to be paid for with things like treasury bonds and treasury bills. So that's where we are right now. Now, the other thing that's happening right now is inflation. Last month, September, 2.2% for the month, and that's been the highest it's been in a long time. Then, to top it all off, the jobs report. Jobs came in double what they were expected to do, and that's unusual to have that kind of situation where you basically don't know that double the jobs are being done. So what this is doing is showing us that the economy still is rocking, that the recession that everybody's expecting is still not happening, and people are making more money, more jobs, inflation. This is not what the Fed wants to see. So that's why the bond market has been selling off, and why the yields have to be higher to get people to buy the bonds. So that's already happening right now. 25% down on an investor loan is 8.125%. Not that long ago it was 6.99%, but it keeps going up. We're pretty well expecting that the Fed in either the November meeting or the December meeting is going to do another 25 basis point increase. Now, what this does is affects mortgage-backed securities. They're very much tied into the 10-year treasury. And so because of that reason, we're expecting rates to go up again. Now, in a previous video, I talked about an investor program that we have right now where we can do rates as low as 4.75% guaranteed for 10 years. And, that is the thing that what we're having to do right now and having to find. Now, we hope to have more builders that are going to join in on that. We have one builder right now in Oklahoma City. We have a second builder that's going to join in December, because you have to have a major commitment in order to do this program in terms of the amount of sales. So you have to have things that are ready to close right now. We're hoping for more, and this is the thing that I want investors to understand. Rates are going to go up. Now, this can also affect this program. If rates keep going up, this program may go up also. Right now, 4.75 or 5.25 as versus 8.25 at current normal 30-year fixed rate mortgages for investors. So the other thing that the Fed has done, and I probably ought to mention, is not only have they talked about the 25 basis point increase, but they've also said that some of the ideas that they had about lowering rates are pretty much off the table. So in other words, it's looking like it's the fourth quarter of next year before the Fed's even going to consider it. And so what that means is we're going to be dealing with these rates for a long, long time. So these special programs, these special financing things that we can put together for you, the thing that's going to make the difference between you making positive cash flow and having negative cash flow. That's the update on interest rates. If you're an investor right now, we have the good rates for you.